Okay, hello everyone. Let's take a moment, look at the disclaimer. This content is for educational, entertainment, and informational purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here only to tell you how BTA analyzes the markets, how we look at the markets, and nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top, but we will, we do make money, lots of it in the middle. We are the stock market masters. And sometimes it seems as though we can see the future. Now, I'm going to be doing a series of videos because we are now in the pivot week. Tomorrow, Tuesday, today is Monday. Today is Monday, May the 30th, 2022. Tomorrow is a holiday. Markets are closed. Tomorrow, Tuesday, will start the new trading week. And that's going to be the start of the pivot week. We will be starting the pivot week tomorrow, Tuesday. That's going to be our week to go in if everything works out. If everything works out, that's going to be our week to go in and take a position, okay, in the major market ETFs. Now, of course, as you all already know, we have already taken a position already in some of the major market index ETFs because we had the follow through day on Thursday of last week. So you know when we get our follow through day, that's our day to start looking for leading stocks and leading industry groups breaking out of sound-based patterns on good volume. You know that. So, and if you can't find many of those things happening, many of those leading stocks and leading industry groups breaking out of sound-based patterns on good, heavy volume, then we say we were taught to maybe take a position in the ETF that we got the follow through day on. There was the ETF that tracks the major market index that we got the follow through day on. So we got the follow through day and we started buying because of the follow through day. And now we're looking at our weekly Bollinger Band RSI stochastic MACD strategy, okay? And all of the members of BTA at BTA@BrownTradingAcademy.com, we all already have the trading plan. We have it already. We have the trading plan for the weekly Bollinger Band strategy, okay? And we'll be following that blueprint to the T, that trading plan to the T. Us over here at BTA will be following it to the T. And we shared that with all of the members for y'all to analyze and look at. Give us some feedback. We gave our trading plan out, okay? We're not holding anything back. You're not going to find any information like what we're giving out anywhere. The kind of analysis we're giving out. They're charging thousands and tens of thousands of dollars for this kind of information. Well, anyway, here's the weekly Bollinger Band, okay, for the DIA, okay? This is the weekly Bollinger Band for the DIA, all right? And as you can see, the setup week was complete. The signal week, which was last week, has also been complete, all right? The RSI got below 30, recycle got above 30. The stochastic, well here, this is the RSI, this is the stochastic, this is the MACD, okay, here. And here are our Bollinger Bands, okay, around the weekly price bars. So let's just make sure we got that clear, okay? Now, once again, the RSI got below 30. recycle, got above 30. The stochastic gave us our bullish crossover. It went below 20 first, came back, gave us our bullish crossover, crossed above 20, and now it's at 29.16. Our MACD, which we know is a slower indicator, it's a slower indicator than the RSI and the stochastic. We're going to be waiting for the bullish crossover on the MACD, the histogram to start getting smaller, and then the histogram to cross and start turning green, get above zero, start turning green. So that's what we're looking for. That's what we want to see as the trading week this week, when the market opens tomorrow and this week, we'll see how this stuff plays out. Okay, but one of the things that, okay, we want to be careful of is this last week, which was our signal week, okay, we had a very wide weekly bar here. Very wide bar. And what I mean by that is the follow-through day that we got on Thursday caused a really strong increase in price. Prices surged upward. And as you can see, prices closed the week out on Friday almost at the very top of this weekly bar. So in our trading plan for the Weekly Bollinger Band Strategy, right, in our trading plan, okay, this week coming up, this week when the market opens tomorrow will be our pivot week. And when we go in on the pivot week, if it works out as planned, and we go in on the pivot week, then we're going to be using the low of the signal week as our second stop loss. And that is where the issue lies right now, because that follow-through day gave us such a powerful, strong upward surge in price. It caused this weekly bar, which was a signal week, to be very wide, okay? And normally it doesn't be quite that wide. And we could use the low of the signal week as our second stop loss. So if we were to go in on the pivot week this week, and we use the low of the signal week as our second stop loss for the DIA, well, from the pivot point to the low of the signal week, which is actually around 313.62, okay, if we go in on the pivot week, if we go in on the pivot and we use this low of 313.62 as our second stop, then we have an $18.45, okay, difference, okay, from the pivot point to the low of the signal week. We have an $18.45 possible loss, okay? Well, we don't want to take a loss this big. That spread is just too wide. We don't want to take a loss that big. So we have to do something to reduce this loss, because remember, we want to always manage our losses. We want to use proper money management, manage our losses. We want to always keep an eye on the risk. We want to manage risk, because remember, the way we were taught is we always are going to try our best to have small losses, okay? There's only three things that are going to happen. We're going to have small losses, small gains, or huge gains, big gains. But what we're not going to do, and what we don't want to happen, is have big losses. Okay, so we want to manage, and to us, this $18.45 will be a big loss. That's $18.45 per share. We don't want to lose that much money. We don't want to risk that much money. That's too big of a spread. So from the pivot point, if we use the low of the signal week as our second stop, that's $18.45. That's a little too much, okay? And all of this is in the trading plan that all the members, we all have it. We all been looking at it. We've been monitoring this here strategy for almost 2 weeks now, okay? So we've been plotting and lying and plotting for it, okay? Lying in the cut, waiting on it to happen, all right? So now it has happened, all right? And remember, this strategy, this setup, has only happened 4 times. in the last 25 years. 4 times in the last 25 years. And each time it happened, we did get a pop. Okay? If you go back and analyze it, it did get a pop. If it pulled back, we're going to get out ahead of time. All right? We're a small loss. But when it worked, big gain, big money. Okay? That's what we're looking for. So now, that's too big of a spread. Okay? We don't want to do that. So we're going to adjust this. We're going to adjust this. And it's in the trading plan. Read the trading plan if the members are listening, right? Read the trading plan. Go over it, analyze it, study it, critique it. And also, like always, y'all give me the feedback so we can get better at what we do. Hey, we have to do that. All right? Now, look, before we step down and show you what we're going to use, okay, instead of this low of the signal week, because we don't want that $18.45 spread, and that $18.45 point loss is too much. Okay. But before we do that, let's look at a few things. What we need to see when we do go in on the pivot week, we need to see prices get back above the middle Bollinger Band. Okay, because this middle Bollinger Band could be an area of interest. You see, it has hit this before and gotten rejected. So as prices move up, we need to see prices get above the middle Bollinger Band. That's our area of interest we're going to be looking at. And also look at this on the RSI down here, the 50 level. Okay, we need to see prices get above the 50 level. This 50 level can be an area of interest also for the RSI. If we can't get above the 50 level, that means that the bulls, the buyers, has not taken full control of the momentum. Okay, so we need to see prices get above the 50 level, come back, find support, and then rally upward, and then try to get above 70, which would be the overbought level. All right, we need to see the stochastic continue to move up, and hopefully it gets above 50. So we got some areas of interest on the weekly chart here of the Bollinger Band strategy that we got to keep an eye on. And don't forget, we went over. Go back and look at the other videos. We went over some weekly levels, okay? Weekly moving averages, weekly areas of interest, weekly areas of resistance that could cause prices to get rejected. And we also looked at some daily moving averages, some daily resistance levels, some daily moving averages, longer term daily moving averages, like the 50-day moving average, which is trending down as prices in these ETFs and major market ETFs are going upward. That can act as an area of interest. That can act as an area that prices can get rejected as it hit resistance and collapse. So we have to keep an eye on all these areas of resistance, all these areas of interest that we can possibly get some resistance and get rejected. Like I told you before, I was taught to keep an eye on everything moving. We watch everything. We see everything. Okay? Now, what we need to do to avoid, and what we're going to do, according to our trading plan, to avoid taking these huge losses like that $18.45, okay, is we're going to step down. We're going to step down to the daily chart. So instead of using the low, okay, of the signal week, of the setup week, the low of the setup week, instead of using that low, which is around 313.62, we're going to use the 21-day moving average on the daily chart, the 21-day moving average on the daily chart as our second stop loss on a closing basis. So let's look at that. Okay, we have a chart here of Lois. Okay, y'all see Lois on here. We can't lose with the stuff Lois use. Man, Lois keeps us in the right side of the market. Look, Lois is going to let us know when we got a bullish upswing. Okay? As you can see, when the magenta line get above prices, saying it's a downward swing, it's a bearish downward swing. Look at prices moving down. When lowest is above prices, that's meaning it's a bearish swing. Look at prices moving down, a downward swing. And we got a bullish upswing when lowest gets a below price. We get that blue line below price, we got a possible bullish upswing. Okay? And notice, we had our follow day on Thursday. Lowest turned bullish, gave us our bullish upswing signal. She jumped below prices 3 days before that. Then we had a MACD crossover here, a bullish MACD crossover. The histogram turned green and started expanding. So Lois is going to keep us on the right side of the trade. Listen, Lois will lead you to success. She will lead you to success. This, Lois, this is incredible. It's not going to be a start of a bull market if Lois don't see it first. But look, what we want to look at here is the 21-day moving average, which is the yellow line. And right now you can see the 21-day moving average for the DIA, okay, is right around 325.39. So if we look at where we're going to go in on the pivot week, and we use the close of the 21-day moving average, okay, and we use the close of the 21-day moving average as our second stop loss, now we got to stop. We got a stop. We got a spread, a difference of $6.68 as our loss. Okay, that's our point loss. That's our dollar loss from our pivot point to the 21-day moving average, a close below the 21-day moving average on a closing basis. Because right now the 21-day moving average is at 325.39. So instead of that $18 possible and 45-cent possible loss, now we down to a $6.68 possible loss. We got to tighten this thing up because that surge on the follow-through day and Friday, the day after that, was so wide, so large, so powerful, okay, that it caused prices to surge and give us that large weekly bar on the weekly time frame. So we're going to step down to the 21-day moving average on the daily chart and use that as our close, as our second stop loss on a closing basis, as a second stop loss on a closing basis, which would give us a possible loss of $6.68. So of course, you know, you got to size the position properly, where that $6.68 possible loss, okay, we're not, remember, we cut our losses. We don't want to lose no more than 1.6%, maximum 2% of our overall account balance on any one trade. Facts. So this $6.68 loss, we're going to make sure we size our positions properly where this won't hurt us too bad if it happens. Hopefully, this thing keep moving up and we get a nice tradable relief rally, okay? So this is the DIA. We're going to step down from the weekly chart. Instead of using the low of the signal week as our second stop loss, we're going to step down to the daily chart, use the daily 21-day moving average as our second stop loss on a closing basis, and that's going to bring us down from $18.45 possible loss to a $6.68 possible loss. That's better, it's tighter, that's what we need to do. So now, let's look at the QQQ, okay? Let's look at the QQQ. And here we have the weekly chart of the QQQ, the Bollinger Band up top, right? Right here we got our Bollinger Band. Once again, we got our Bollinger Band up top. We got our RSI here, and we got our stochastic here. Now, once again, we have already gotten the setup week, prices closed below the lower Bollinger Band. We got our signal week, prices went back above, closed above the lower Bollinger Band. The RSI got below 30 on the setup week. The stochastic was well below 20 on the setup week, okay? The RSI recycled, got above 30. The stochastic gave us a bullish crossover and got above 20. Right now, the stochastic is just above 20 at 20.12. So now we have the setup week and the signal week complete. Now, tomorrow, the market opens for the start of the pivot week. Okay, look, we got the same issue here on the QQQ as we had on the DIA. Okay, this week, the signal week, okay, last week, the signal week, because we got the follow day, it got pretty wide. The spread got pretty wide. So starting tomorrow will be the start of our pivot week. So if we use the pivot point, okay, where we're going to get in at, according to our plan, okay, our trading plan for this strategy, from the pivot week, from the pivot point, if we use the low, once again, the low of the signal week for the QQQs, the low of the signal week for the QQQs is around 282.25. Okay? If we use that low, from the pivot point to that low, the spread is around $26.85. That's our possible loss. That's the difference from the pivot point to the second stop loss, which would be the low of the signal week for the QQQ. Well, we don't want to take that big of a point loss. That's going to cause the amount of money that we can lose to be just too much. We don't want to do that. Okay? So once again, we got to adjust this. And that's in our trading plan on how to deal with the possibility, of this week, okay, the signal week being so wide and so huge. Because it was a possibility, we spoke about the possibility that we could get a follow-through day during that week and prices could surge. Okay? So we're going to have to adjust that. It's in our plan on how to deal with that. So we're going to have to adjust this strategy, and we're going to have to step down once again, like we did on the DIA. But once again, look, we got areas of interest here we got to be concerned about. Here's that middle Bollinger Band. We need to see prices get above that. We're also going to need to see that RSI get above 50 to tell us that the bulls are taking control of the upward momentum. And we need to see this stochastic stay above 20 and start getting up to the 50 level and get above 50. So remember those the areas of interest. We got to be careful. We know that the prices on the weekly chart can get to that middle line of the Bollinger Band and get rejected. So we got to keep our eye on that. All right? We got to keep our eye on that. Hopefully prices can go and move back up to the upper Bollinger Band. Well, we'll see. We'll see. But we're going to keep our eye on it and see and make sure that we're watching this thing, because we don't want to get caught in the downdraft. All right? Where this thing fall apart on us. So what we're going to do now is that we have to step down, because we don't want to use that low of the signal week and have that $26 possible loss looking at us, right? It's too much. So we're going to step down. We're going to step down to the daily chart of the QQQs and use the 21-day moving average on the daily chart right now on the closing basis as our second stop loss. Right now, the 21-day moving average is at 303.84. 303.84. Hey, don't forget about Lois. Look at Lois. When that magenta line get above price, showing us a bearish downswing has started, a bearish swing has started. Look how prices start moving down. Okay, it's below the 21-day moving average. Prices rally up to it. Lowest signals. Hey, it ain't what you think. This thing is bearish. Boom, prices drop. So now we're above the 21-day moving average. That's great. Lowest has given us a bullish upswing signal. That's wonderful. But what we want to talk about right now is the 21-day moving average, right? This 21-day moving average of the yellow line, we're going to use that instead of the low of the signal week as our second stop loss. Right now, it's at 303.84. So if we take where we're going to get in at the pivot, okay, and use the 21-day moving average on a closing basis as our second stop loss, then we only going to have a $5.26, $5.26 possible loss instead of the $26.85 if we lose the low of the pivot week of the signal week. If we use the low of the signal week, excuse me, instead of that $26 loss of using the low of the signal week, we're going to step down to the daily chart, use the 21-day moving average on the daily chart on the closing basis as our second stop loss, and now we're down at a $5.26 possible loss. That's the spread. That's the possible loss for the second stop. Much more manageable, much better controlling of our risk. That's what we want to do. Okay? So we're going to step down and use that. And don't forget, we got to keep our eye on all of those possible areas of interest. All right? We want to always manage our risk properly. Okay? Now, in the next couple of videos coming up, we're going to be looking at the SPY and the IWM, and then we're also going to be looking at the ITOT, okay? Because they are also showing very wide weekly bars on the signal week because of that follow-through day. So we have to adjust. It's in our trading plan. We have to adjust. So we're going to look at those in the next couple of upcoming videos. So make sure you look out for those. We're going to be posting them up shortly after this video. So make sure you keep an eye out for those, because we don't want to get caught in the downdraft, and we don't want to have those large possible losses staring us in the face. We got to manage our situation at all times. So be on the lookout for them next videos. We're going to be posting them up soon. Okay, take care.